If there is one person who I need to talk to today, there is one person. It's my dear and good friend, Peter Tuchman, who joins me. Yes, Peter, you have not let me down. You have the hat.
I never let you down, Richard. Of course I do. I made it just for you.
So what caused today? Why did it happen today when we'd had such a bad week so far?
I know. You know what? Look, it's always curious what makes this market move. You know, Richard, this index is, started in 1896. I believe I was here back then. It was a while ago. Some people believe I was here at the inception of the Dow Jones Industrial Average, but realistically, I've been here for at least the last 41 years of this, and I think Dow 600 was the first hat I ever had. Why did it happen today after first of all, January was such an odd month in so many different ways, right? With, everything possible that could be thrown at a market has been thrown at this market in January, right? And then February, we were 5 days into February. We had a couple of days, Tuesday and Wednesday, were mirror images of each other, right? One day we opened up and trended down. One day we opened down, trended up. And then the advances versus declines were 50-50, right. So it seemed rotational. Yesterday was 2.5 to 1, declines versus advances. It felt, with the VIX up 18%, it felt like people were starting to really get anxious and fearful around, obviously, the Bitcoin, silver and gold, and the jobs numbers and all that. And it was a bit of I know there's by no means a bloodbath, but it was a significant sell-off yesterday. And I think a lot of people got caught up in that narrative that, look, that this is going to be what February or 2026 looks like. And then today, literally out of nowhere, we came in with just this irrational enthusiasm. There was huge volumes. Think about this. February, we've been trading 1.5 billion a day, which is 300 million more than usual here at the NYSE. So there's a lot of money being put to work. I believe that the buying is sort of buying with intent.
Peter, you've just taken the buying. It's the balancing act, Peter, between the fear of being on the wrong side of a falling market and the fear of basically missing out on gains still to come. It's classic. I mean, it doesn't get more classic than this.
It was you're absolutely right. That was the perfection. Yesterday there was fear and anxiety, and it was reflected in the VIX. And then today it felt like it was FOMO, that nobody wanted to miss out on participating in this, enthusiastic, somewhat irrational rally. But today, think about it. I always say that we're one tweet away from crazy town in this new world we live in, and you know what I'm referring to. And so anything can happen. But when you're capable of having 1,000-point moves in one day, then I think people need to just stay the course. Because, I believe a lot of people sort of decided they were going to start bailing out of the market yesterday, and think about how they're feeling today. When one day does not make a market, but when you can move 1,000 points in a day, the trajectory seems more bullish than bearish.
So, pull the strands together. We've got, we don't know what's going to happen really too much with the Fed. We don't know about trade policy. We do know that these companies are spending hundreds of billions on AI, and the market wants to rise.
No, absolutely. Look, I think that the market, think about it. We touched S&P 7,000 a few days ago, right? And then we backed off of that. It felt like, and then we almost got close to the Dow 50,000 a few weeks ago. And it felt like the market was not going to let us get there easily. It was going to make us work for these levels. We do know, obviously, look, Palantir earnings came out once again, record earnings. The AI game is not over yet. That story is still got some positive directionality. We know that Jensen told us in December that the next sector to be looked at is energy, and how are we going to fuel all of these data centers, and that's either going to be the catalyst or the obstacle to taking this whole experience to the next level. And it seems like that they're finding a way to do it, and it's extraordinary. It isn't extraordinary. These are not just numbers. I know the haters say, oh, the Dow is not a big index, and oh, these numbers are just numbers. They're not numbers. This reflects an incredible economy, right, and a resilient resilience of the human spirit and the investor, and also reflects in a big way, Richard, which is the demographic which I follow, is the new retail investor, right? They are back. The retail investor are back, and they are now smart money. They were the ones buying the market in February, March, and April when the institutions were selling it. They were the ones buying it in November when everyone was all scared. The retail investor is the person to keep your eye on, because they are here to buy this market.
Absolutely. Good to see you, sir. Resilience of the human spirit. I can think of nobody who better epitomizes it than yourself. I look forward to Dow 55,000, Dow 60,000 with you. Peter Tuchman at the New York Stock Exchange.